Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here with your Monday Market Webcast. All right, if the audio on this is not quite what it usually is, it's because I am traveling today, but jump right into it. Daily chart, you can see the box that we've drawn, and we talked last week and the week before extensively about the 20-day simple moving average and whether that was going to be tested as a function of time or as a function of price. Well, you can see it is being tested today as a function of time. You can see how it's lifted, it's come up into the box, and just by this process of shedding these lower prices, the moving average has come up to meet price. So far, it's been held as support. So a big part of today, a big part of the overall takeaways from today are whether or not we're going to close above or below the green line. The 9-day is still an issue. It's something that has been battled over. It's something that turned into resistance on Friday. So now you've really got, the battle lines are really drawn at this point. You've got the 9-day up top, you've got the 20-day underneath, and they're going to have to, somebody's going to win that zone. And what I would say is typically what you see, although not every time, but most times, is whoever wins that zone is going to win the next leg of this move. You can see back here, you ended up with the 9-day and the 20-day were inverted at that point because we had come down so much prior to this. They won. They broke out. They came back. They tested it. They broke above, tested it again, and went. That could happen in the inverse. The only point I'm trying to make is whoever converts that green line is going to take the 9-day with it, come up or down out of that box, and they're going to get the next leg to the tune of, not even so many, with regard to how many handles, but more with regard to, say, the next, 3 weeks worth of price action. So this is it's an important day, and it's it's an important moment in what is this market going to be, rest of April, certainly into May. All right, hourly chart, you can see in the overnight. I drew this little box Friday. Bears won that battle, broke down out of that box, took it straight down, spent a couple of hours into the Europe overnight, into the Europe Open, down at daily mid-band. And they're coming up now to test the 9-day, and you have the new weekly pivot there sitting 41.62 and change. So this is your area. This is the battle zone for today. There's not a whole heck of a lot to discuss beyond that. It's just very important to understand this is the moment we're in the market. These Mondays have been tough to trade. They have been choppy. But we're at a situation now, we're at a point in time now after being in this rectangle for a couple of weeks where if it wants to make a serious decision, this is, these are the types of areas and this is the type of zone that if it's converted meaningfully, is going to bring out, the next leg of things. The Bears have done a good job of lower highs and lower lows down from 41.98 quarter. If they can do it again here, you don't want them to break this high from Friday. If it stays lower high, if you create a lower low and it can run, then you have a couple of things, at least on my stuff. You have a de facto test and hold of the 9-day. You have weekly pivot acting as resistance. It doesn't need a touch. And if you break this low and run with it, then you have a break of the 20-day. If you do that, then what you'll see on this daily chart, go back to that, is it should run down to the bottom of the box, test these lower prices that have established the bottom end of that rectangle, and potentially, convert that 4100, get down into 4070, 4060, 4050. Now, the inverse is also true. If what you see on the hourly chart, you see weekly pivot in the 9-day get converted, you see a higher high here. Well, that screws the whole thing that the Bears have been trying to do. And you see a breakup from this little channel here Then you're dealing with this high. You're dealing with this high. You start dealing with the highs from Thursday, Wednesday, Tuesday. If you do that enough, then what you're left with is support at the daily mid-band, conversion of the 9-day, conversion of the weekly pivot, and then you end up heading back to the top of the box and potentially going up and doing something with a 42 on it. So that's the sandbox that we're playing in. But right now, as far as Monday morning is concerned, they're going to sit there and they're going to throw sand at each other between these two lines until somebody wins and somebody loses. From a trading perspective, don't get torn up. Don't overtrade it. It is a wide enough area where you should be able to get some things done. But if they decide they don't want to do much with it, don't try to anticipate the breakout of the breakdown, especially on a Monday morning. Last week was some of the tighter, lower volatility price action that we've seen, certainly in 2023. Don't try to jam. All you're doing is jamming a square peg in a round hole. That's all you're doing, and you're going to expend psychological capital and actual capital waiting for something that's not ready to show itself yet. So to the extent that you can, be patient. All right, that's all I got. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. I'll talk to you tomorrow.